Palantir is currently sitting on an $11.2 billion revenue backlog, a figure that immediately signals just how much future business is already locked in. This level of contracted demand is not something you typically see unless a company has positioned itself at the center of a major technological shift. In this case, that shift is artificial intelligence. Over the past several years, artificial intelligence has gone from a niche concept to one of the most powerful forces driving capital markets. As a result, a wide range of companies have experienced significant upside simply by associating themselves with this trend. However, it is important to separate those benefiting from genuine innovation from those riding momentum driven purely by hype. Against this backdrop, Palantir has emerged as one of the most polarizing companies in the entire market. Just a few years ago, at the early stages of the artificial intelligence boom, the company carried a valuation of roughly $12 billion. At that time, many investors viewed it as a niche government-focused analytics provider with limited commercial scale. Fast forward to today, and the story looks dramatically different. The company's market capitalization is now approaching $400 billion, placing it among the largest enterprise software players in the world. This type of transformation in such a short period naturally raises questions, not only about how the company achieved this growth, but also whether the current valuation can be justified. To fully understand this shift, it is important to take a closer look at what Palantir actually does and why its offerings are resonating so strongly in today's environment. At a basic level, the company is categorized as a data analytics provider. However, that description does not fully capture the depth of its capabilities. The broader software as a service landscape is filled with tools designed to process and visualize data. Many of these platforms integrate seamlessly into existing workflows and generate dashboards that summarize key metrics. However, there is a fundamental limitation with many of these traditional systems. They are often designed to present historical data rather than enable forward-looking decision-making. In many cases, executives are left with clean visualizations that look impressive but do not necessarily provide clear guidance on what actions to take next. This creates a gap between data visibility and actionable intelligence. Palantir addresses this gap in a way that is fundamentally different from most competitors. Through its Foundry platform, the company builds highly detailed digital representations of an organization's operations using ontologies. These ontologies map relationships between data points at an extremely granular level, allowing users to see not just what is happening, but why it is happening and what could happen next. This approach transforms data from a static resource into a dynamic decision-making engine. What makes this even more powerful is the ability to modify these models in real time. Businesses can simulate different scenarios, test strategic decisions, and immediately understand the potential impact on operations, revenue, and customer behavior. This capability is especially valuable in industries where conditions change rapidly and decisions must be made with precision. As a result, Palantir has become deeply embedded in sectors such as healthcare, retail, manufacturing, logistics, financial services, energy, and defense. To better contextualize the company's rise, it is helpful to anchor the timeline to a key moment in the artificial intelligence movement. The release of ChatGPT on November 30th, 2022 marked a turning point in how artificial intelligence was perceived and adopted. Around that time, Palantir was already gaining traction, but the acceleration that followed was significant. In 2022, the company generated $1.9 billion in revenue, reflecting growth of 24%. While this was solid, it did not yet signal the explosive trajectory that would soon follow. At that point, Palantir had 367 customers across its commercial and government segments, indicating that adoption was still in relatively early stages. As we move forward to 2025, the transformation becomes much more pronounced. Revenue surged to $4.5 billion, representing growth of 56% year over year. This level of acceleration is rare, particularly for a company already operating at scale. At the same time, the customer base expanded dramatically to 954 clients. This increase highlights not only strong demand, but also the company's ability to successfully onboard and retain customers across a wide range of industries. A major driver behind this growth has been the company's ability to secure large and strategically important contracts. One of the most notable examples is its agreement with the United States Army, which is valued at up to $10 billion over the next decade. Deals of this magnitude do more than just contribute revenue. They reinforce the company's credibility and position it as a trusted partner for mission-critical operations. In addition to these headline contracts, another key metric that underscores the strength of the business is its remaining performance obligations. By the end of 2025, Palantir reported $11.2 billion in total remaining performance obligations. This represents an increase of 105% year over year, further emphasizing the growing pipeline of committed future revenue. When you step back and look at these numbers collectively, it becomes clear that Palantir is not just participating in the artificial intelligence trend, it is actively shaping how organizations leverage data to drive decisions. This level of influence naturally attracts growth-oriented investors who are looking for companies capable of delivering outsized returns. However, this is where the conversation becomes more complex. While the growth story is undeniably strong, the valuation presents a different challenge. The company is currently trading at a price-to-sales ratio of 87 and a price-to-earnings multiple of 241. These figures are significantly higher than what is typically seen even among high-growth technology companies. At first glance, such elevated multiples might suggest that the stock is overvalued. After all, sustaining this level of pricing requires continued rapid growth and execution. Any slowdown could lead to a reassessment of the company's worth by the market. Despite these concerns, there is an important aspect of Palantir's business that helps explain why investors are willing to assign such a premium. The company's ontology-driven approach effectively positions it as a category disruptor within the data analytics space. Unlike traditional platforms that focus primarily on data storage or visualization, Palantir provides a comprehensive system that integrates data, analytics, and decision-making into a single unified framework. This distinction is critical when comparing Palantir to competitors. Companies like Snowflake, Databricks, and Microsoft Fabric offer powerful infrastructure solutions, but they often require additional layers of tooling to achieve the same level of operational insight that Palantir delivers natively. This creates a competitive advantage that is not easily replicated. Furthermore, Palantir has demonstrated a strong ability to expand its footprint within existing customers. A company might initially adopt Foundry for a specific use case, but over time, it can integrate additional platforms such as Gotham or Apollo. This cross-selling capability increases the lifetime value of each customer and strengthens long-term relationships. As a result, Palantir has built a structural advantage that functions as a protective barrier against competition. Few companies have been able to match this combination of deep integration, scalability, and real-time decision support at a similar level. Looking ahead, the company's outlook suggests that the growth story may still be in its early stages. Management has indicated that revenue expansion could accelerate to 61% in 2026. If achieved, this would further reinforce the company's position as one of the fastest growing players in the enterprise software space. Taking everything into consideration, Palantir represents a unique case in today's market. On one hand, the valuation is undeniably high and requires careful scrutiny. On the other hand, the company's technological differentiation, strong demand, and expanding ecosystem provide a compelling argument for continued growth. For long-term investors who are focused on building exposure to artificial intelligence, Palantir may stand out as a strategic opportunity. Its ability to transform raw data into actionable intelligence, combined with its growing list of high-profile clients, positions it as a key player in the next phase of digital transformation. Ultimately, the decision comes down to how much weight you place on growth versus valuation. For those who believe that artificial intelligence will continue to reshape industries and that Palantir will remain at the forefront of that movement, the current premium may be justified. For others, the elevated multiples may signal a need for caution. Either way, there is no denying that Palantir has become one of the most important and closely watched companies in the artificial intelligence landscape. Its journey from a relatively modest valuation to a market giant in just a few years is a testament to how quickly innovation can reshape the competitive landscape. With that being said, I will see you in the next video.